Well, Brexit aside, there was more bad news for Europe today, with a leading survey of businesses in countries using the euro showing a sharp slowdown in growth.
The PMI survey for February also showed a shrinkage in activity in France, the Eurozone's second largest economy. Well, let's cross now to Richard Perry, a market analyst at brokers Hanstech Markets, for some analysis on the day's events. Let's talk about that Eurozone PMI first of all. Richard, is it particularly bad news?
Yeah, good afternoon. This PMI data certainly isn't great for the growth prospects of the Eurozone. It certainly looks like the Eurozone is now tracking at probably about 0.3%, so that in terms of Q1 growth, and that could even potentially slow down even further because the component of new orders through that PMI data today suggested there was a bit of a slowdown there as well. So, and also backlogging was still an issue. So it just seems as though that the Eurozone is slowing in terms of growth, and that I think is probably going to be pushing the ECB towards further action when it meets next month.
Well, indeed, we have all been expecting, haven't we, more action, a rather dramatic announcement for the European Central Bank when it does have that policy announcement next month. Do you think this will add to the impetus, potentially add to the size of whatever their increase in stimulus that Mario Draghi announces?
I think in terms of the size of the announcement they're going to make is difficult to know actually at the moment, because at the moment the market is pricing in possibly another 20 basis points in terms of the deposit rate cut, in terms of looking at the German two-year Schatzjahr, which takes to be a little bit of a proxy for that number. So it could be 20 basis points, but we had that back in December where the Schatz was saying the same sort of thing, and then Draghi couldn't deliver on that. They actually disappointed the market with only 10 basis points of cut to the deposit rate. So the market tends to sort of get a little bit too swung one way. So we could see a bit of a disappointment, because there's always this big argument on the ECB Governing Council. The Germans with Jens Weber always battling the corner for the hawks, and that could again be the case. But at the moment they're pricing in 20 basis points. But it'll be difficult to see whether that actually comes through or not. Certainly the ECB does, certainly the doves on the ECB think that the Eurozone needs more in terms of stimulus. They see the inflation data just rolling over, and also the growth as well. And it's going to be difficult to pull it through, but I think ultimately they're going to have to do something further.
Richard, let's talk about the markets and the potential for Brexit now. We had a shaky start on the main stock markets in Europe today, but they seem to be very much shrugging off the concerns about what happened over the weekend. A different story for the pound and the currency markets, but do you think are investors particularly worried about Boris Johnson, this enigmatic and charismatic leader's intervention into this debate?
Well, certainly at the moment, the reaction on the FTSE 100 wouldn't suggest that they are, because obviously we had this strong run higher. But at the moment, obviously, we've got the oil price being a big driver of market sentiment, and that pulling higher today has certainly helped equities in the UK to push on as well. But in terms of the reaction on cable, 300 pips to the downside, over 2%. That's a huge move. That's an enormous move. And it's also back at that big January floor that we saw at 140.80. And that is a big multi-year low. And that needs to hold. If that gets broken to the downside, we're looking at 140 big figure as a minimum, but also the likelihood of possibly the retest of the 2009 lows at around 136. So there is potential, much further downside potential in this move on cable. But certainly for equity investors, they haven't reacted yet in terms of whether the Brexit is going to be a good thing or a bad thing. To be honest, they probably don't really know. The vote is going to be very tight, and I think it's just the uncertainty ultimately that's going to be a drag on the market.
Indeed.
At the moment, it's not really happening.
Richard Perry from Hanstech Markets, there we'll have to leave it. Thank you very much for joining us.
Thank you very much.